And then we will have the setup with the tomorrow. I will have another problem which we will have a setup with all kinds of system setup. So let's see here. I just want to finish that. It's just the last two, three steps we have, which are not very long. So we'll just finish it off. Okay, okay, so stop sharing. Let me do my taping here. Where is my taping here? Record. Start recording, continue, confirm. I put the recording anyway, all of the recordings. So if you need them, they're all in your share.
Thank you so much, Mrs. Tariq.
Okay. All right. So I put all the recordings uploaded up on the share, so you should have them. Let me see now. Where are we? Here and here. Okay. So now we're just left with the last three steps, which are basically two are more a little bit more involved. And so if you notice here, I actually, once I updated everything, which was the suggested trial balance, I had the income statement and I had the balance sheet. And then obviously I told you this is not what we send to the government, to the creditors. We actually make those statements separately like this. So we have the income statement just the same way, except it makes sense once you understand that revenues represent all the cash coming in from the running of the business, which is 39,800. And these are subtotals. They have nothing to do with debit credit, by the way. It's all minus plus. And then minus your expenses. Expenses represent all the cash you paid for the running of the business. So if your cash coming in represented by revenues is 39,800 minus your expenses, which are 96,200, which is cash going out. So you must have made 30,180. So if you start to think in these terms, instead of looking at revenues as some word, which is fees earned or whatever, and then the expenses as some word, you start to think in terms of, okay, revenues show what the cash, how much cash I got into my cash account from the running of the business, and the subtotal, because I could have 2, 3 different revenues. So that's why it's a subtotal. And then all you do, you just copy from the worksheet onto this paper with a minus plus. This minus this will give you the net income or net loss. Everybody is okay with that? Yes? You understand what it
Yes.
represents? Okay. Then we also would like to see whether what is the financial strength or weakness of a company, of my company. So I put all my, pardon? Yeah. Somebody has a question? Can ask me. So assets show all economic properties owned by the business, used in the business to run the business to earn more money. Out of this, how much is owned by you and how much is not owned by you will tell you how strong or how weak the company is. And that's why instead of saying, oh, balance sheet, somebody asks you balance sheet, it's a technical word. You just say, well, it shows you how strong or weak the company is. And as I told you before, if I have $100 worth of assets, which basically includes cash receivable to run the business to earn more money, and I have $10 worth of liabilities, means out of this 100, I don't own 10, I still have to pay $10. So I own only 90. Okay. And I give you this very basic example by giving you, like, this is one company. There's another company which actually also has the same, just to keep it very simple. But this company has $30 worth of liabilities and $70 worth of owner's equity. So if you want to see as to which company you would like to invest in, obviously you will have to take a look as to which one is more strong. Okay. And obviously we know the stronger company is the first company because it is 90% owned by the owners and 10% is a liability. So That's why balance sheet shows you the financial strength or weakness of a company. You have to make sure that you always remember that assets are equal to liabilities plus owner's equity. Make sure this is very basic, but people actually they have difficulty. By the way, if somebody says, "So what are assets equal to?" It's a identity. Left side is equal to the right side, and we mathematically we quantify it, and then we show that this out of this total, how much of this is owned by the creditors, how much is owned by the owners, and we found out that 3.76% is actually owned by the creditors, which means the owner owns 96.24%, which is basically gives you an idea. So everybody is fine with this. If you have a question on this, ask me. Now, once we have gotten rid of or facilitated everything with the paper, take a look here. Number 3 was a paper. Then I took number 4 was a paper to make sure that the unadjusted trial balance, which does not include the transactions I actually did within the business, but I didn't record it. I put it there. And then I put all the activities which took place, which I didn't record, I put it under adjustment. So now what happens is on this paper, this is very important that you relate. On this paper, the balances changed, right? But did they change in my books? They didn't change in my books. Now I'm going to step number 6, okay? So if they didn't change in my books, take a look at my books. Take a look at my books. Don't ever touch cash because there is nothing coming in or going out because the business is closed. I'm just overnight, I'm going to do the 7 more steps and I will actually complete it. Now notice here, so this one here, I have 15,000. Here I have 5,800. I have 10,005. I have 68. I have 0 accumulated depreciation. Accounts payable is 3,400. I have unearned still 4,000. And so if you notice all these balances, these are the old unadjusted trial balance. Now take a look at the balances here. The accounts receivable is not 15,000, it's 16,000. Office supplies is not 5,800, it should be 4,800. And all these balances, they don't exist. This is 0, 0, 0. And here we have 200, 1,000, 3,500, 920. Obviously, we did this and we added these accounts because we know these accounts are always going to be updated after we do the recording, and then we do the adjustments on the worksheet. So what do? The reason why I said you make sure that you debit A and you credit A, you debit B and you credit B. Okay, make sure. You cannot write them in this order. You can't post them in this order. And anyway, you cannot go straight into your general ledger and start fixing your accounts or balances. You have to, again, everything in the 8 steps, apart from everything, it's all recording and posting. The first step is recording. Second step is recording. Third step is minus plus on a piece of paper. Step 4 is, again, adjustments, debits and credits, and then we extend it. So we found out that the real balances on 31st of December should be these. But my general ledger should have these. I don't have this. Why? Because I only change it on this paper. I didn't change it it doesn't automatically change my general ledger accounts. And so all you have to do is you take your adjustment column and take a debit to A and a credit to a debit to B and a credit to B, and record them and post them. So this is a piece of paper I finished. Then this is these 2 pieces of paper I finished from my worksheet because everything is now separated here. And once I have done that, now I have to go back and make sure that I record and post my adjustments only. And I'll go one by one and you'll see that the balances will start to change. So when I take the first A and A entry, My office supplies expense will become 1,000, and my office supplies will become 4,800. So let's see here. Let me see. Okay, let me go here. Here's your journal. You see, if you see my journal page here, it's 35. I'm assuming, even though we only have page one here, right? But we did finish, let's say, 34 pages. And on the 35th page, I will make you don't have to write what I'm writing, but you write it right now so that you know adjustments. Okay, this is just for you to understand that this came after I did my recording posting. And then after that, I went to a piece of paper, trial balance. I went to another piece of paper worksheet. Then I go to income statement, balance sheet, again, pieces of paper. So nothing was adjusted in my books. Remember, my only records in the company are the books, journals, and ledger. So just to make it clear, I just always write this. So A, you don't have to write this, but I'm just trying to tell you as to how these adjustments are done. Okay, so we will write adjust it. Okay, so A. So what is my A entry here in my adjustment? Okay, that's what I will, let me see here.
Office supplies, no?
Yeah. So now, all of you, so this is December again. This is December. Very good. That's what I want to know so that you can connect. So this is December. Now make sure it's December 31. And so now we will have office supplies expense debit. And if you notice, if you follow it systematically, it's not really that difficult. It's just the understanding of it. So that was $1,000. Okay. And
Question,
then,
sir.
Yeah.
It's December 31st or January, because we are recording for the next month, right?
No, we're not.
Okay.
I said this here, 31st.
Okay.
Why would it be January? January is next
Yeah.
month. So but
Yeah.
why is it January?
So we are not
Why did you
finished for
think
the
it was
December.
No, but I'm calculating my profit or loss for the month of December. Why would I check January?
Okay.
You understand?
Yes. I thought here it's finished, like we have done.
No,
balance
because you
sheet
might
and
be mixing up our closings
Okay. Okay. Okay.
because we
Thank
did that in year end. In year end, we did the same thing, by the way, except
Okay.
we're not there yet. I will tell you when it will be January 1, all right?
Okay.
Okay. So
thank you.
everything is up till now. What I'm doing here is going to be just up to 31st of December, and we are trying to see what profit or loss I made. So I have it. I've already calculated it. But I did not update my general journal or my journals and ledger. So credit office supplies. Okay. Now, I will now ask you a question. But anyway, whoever is thinking anything differently, just ask me. Okay, I'll explain it to you. Don't worry about it, because if you don't ask me, then you will stay with it. We won't know. So notice here, my balance, again, just follow me here. My balance in my general ledger for office supplies expense should be 1,000, right? It's right here. Correct? Take a look.
Yeah.
Office supply. These are the right balances here. So and as I said, when you do the adjustments, do it from here, A and A, B and B. And when you once you post, you compare the figures here. Okay. So according to this, my office supplies expense should be 1,000. I have 0 in my books. And my office supplies should be 4,800 and not 5,800. Now let's see when we go to post this. All right. So we go here.
Excuse
and
me,
we go,
Mr.
Yeah,
Tariq.
go ahead.
question.
Go ahead. Yes.
I don't know if I'm wrong, but I want to understand it. I wrote And my note is that you said don't put $0 in any account. Is that right or not? Why you put here zero for, was the
Well-
unadjusting?
No, because when I picked up the balances, there was zero balances because I want to use this. So if I include the account because I want to do the adjustments, I'll just put zero balances here. This is not a trial balance. This is an unadjusted trial balance on a worksheet. So I need these accounts.
So it is just here,
I
we
mean,
can put
even
zero.
even if you don't put even if you don't put the zeros, it doesn't matter.
Okay.
So long as you don't forget, this trial balance will not include zero balances, right?
Yeah,
That's what you wanted to know, right?
okay. Mhm.
Okay, now, but I need more accounts which will be used for my adjustments, and we learned that. Notice here, accumulated depreciation, I had to write it because all accounts which will be used in my adjustments will be added here. And they're all in my chart of accounts. If you see this, did you see my chart of accounts here? They're
Yeah.
all there. Okay,
Mhm.
so you don't have to really come up with any new accounts yourself. Sorry, it's not here. It's here. Okay. You see this? All
Yeah.
my accounts are, this is my chart of account. This is my general ledger. All, what did I say? The structure of your general ledger is determined by what?
Chart of accounts.
Chart of account. And the general ledger will always be in this order. Now, as you keep on learning accounting, you know that these accounts have already been opened by you. Okay? You have, before you start, you have come up with chart of accounts. Okay, even if you don't, you keep on adding. That's why we give these numbers in between with a gap. You see this? 101, 106, 124, and same thing here. You see, if you have 401, okay, the next account was wages expense, got 613. So we had all these accounts in between because we needed to add depreciation expense. Okay, then we have from 613, we went to 619 or 621. So all of them were there, but there were zero balances. But I know they will be used in my adjustments. So when I make my worksheet, I will take all the whole chart of accounts and I will put it here.
So you mean in the adjustment, we don't need to put zero, but in an adjustment trial.
No, but this is a normal practice that the accounts here, because you're going to open all the accounts
Yes,
from the chart of accounts. Any account with no balance, you just put a zero. I mean, it's not going to be anything wrong in there, but it's just to make sure that you understand that these accounts are not yet used by any transaction. You understand?
Yeah.
So,
Okay.
so all right. So
Yeah.
if you're, yes, because sometimes some people they're not sure, because I tell you all the time that don't put zero balances, right? In the trial balance.
okay.
In the trial balance. But if you are now doing the worksheet, you have to put the whole chart of accounts because you know that they are going to be used. All right.
Okay, thank you.
Okay, good. So anybody else who still has so now how do you actually go about updating? So let's see here what we did. Okay. Okay, so now this is the entry, and we know that the adjustment A and A is done. And after I post it in these two accounts, my balance should be 1,000 in my office supplies expense, or anything, doesn't matter, updated amount will be the same as these balances. So once you record the adjusting entries from the column adjustments, debit and credit, then when you post, after you post, you compare the balances if they are the same balances as adjusted trial balance. Okay, so that you double check it. So now notice here what will happen. I'll go now to my general ledger. Okay, office supplies expense. So here we have office supplies expense. Sorry, right here. Office supplies expense. So this is December 31st. Okay, and what page was it? Can't be J1.
1.
No.
Ah.
I told you.
Yeah, okay. It is step 6, yeah?
Here. J what? Journal page? Nobody can tell me. Can you see
Page
my screen?
35. It's the page 35.
35, J35. It's right here. And look. Look here. This is page 1. It's the same journal. I'm not using it. I don't have 10 different general journals. I have one general journal. So what did I say? I said, look, we're going to use as if we have used up, we're going to make sure we think that we have used up 34 pages for my journal entries. So now I must be doing the next page for adjustment must be page 35. So is everybody with me on that or not? You can ask me if you're still not clear. Okay, here, J35 means this entry has been taken from where?
On page 35.
From journal page 35. That's right. So 1,000. What's your balance? What's your balance in this account now?
$1,000.
$1,000. So this is 1,000. I made a mistake. Good. And credit office supplies, right? So go to office supplies. 31. What's your page number from where you're taking this entry? What's the page of the journal? I'm waiting. Nobody knows? I just showed you.
Same page.
It's same page. What page?
35.
Listen,
35.
come on, but guys, wake up. Okay, so we write J35 and credit. You know how to post, no? That's the second thing we did.
$1,000.
So now what's your balance here? Debit of 5,800 and credit of 1,000. What does it give you?
57.
No, 5,800.
It's a credit. It is.
Pardon?
You're subtracting.
So, I mean, is it that difficult to give me an answer from 5,800 minus 1,000?
It's 48.
Thank you. That's all I'm asking you, guys. What's wrong?
Here, the number.
So now go back and check. Is this balance right? Here you go.
Yes, it's right.
Yeah, then look. Office supplies, 48, right?
Yeah.
Correct? And office supplies expense 1,000. So you got it here, but you didn't have it in the books. Why? Because you're doing it on a piece of paper. You're not recording and posting. You're not going to go and start scratching those numbers. You always, in accounting, you cannot do anything without recording debit and credit. So now tell me, what's my second entry? B. Debit to what? It's on 31st.
It'll be insurance expense
Insurance expense.
for $200.
Okay, insurance. So slowly you'll start to connect. Okay, you'll see this $200 and prepaid insurance, right? That's why I wrote this A and A, B and B. That's how you use this, so that you can learn. You know, this is always going to be written, these A and B, because companies don't have 5, 6 adjustments, by the way. Companies have a lot of adjustments, just to let you know. I mean, what we are learning is on a very small scale, so you make sure you can enlarge it on 10, 20 times or 30 times as to what they have. So now I go back here. Okay, so take a look here. My insurance expense should be 200. And my prepaid insurance should be, what is it? 10,200, right? Let's see
Yeah.
this. adjusted travel 10,200, and insurance is 200. So now take a look what we have in our books. Insurance expense. What do we have in insurance expense? Zero. That's why we put zero, because they're open and closed the same day, by the way. I will tell you later on. So 31. And this is what, J what?
35.
J 35. Debit your 200. Debit your 200. Tab 200. DR. This is to help you to put your balances, because in the beginning we do get confused. So here we have prepaid insurance of credit of 200. Okay, so I mean, don't forget your posting, how you do posting, because what happens is you have few weeks after you, so balance is what now? 10,000 for debit, 200 credit, 10,200
200.
debit. Okay, now take a look again and see. You can actually see, if you want to compare, that in my adjusted trial balance, my insurance expense is 200 and my prepaid insurance is 10,200. So it does not automatically change the in my general journal and ledger, all these balances. You have to record and post. Now we go C. And so C
Rent
is
expense.
Rent.
rent expense,
Rent
is it?
expense.
No.
Yes, rent expense.
All right. Rent expense. And how much is that? Oops,
3,500.
31.
3,500.
3,500.
Okay. And rent expense. Because this was 10,005 for 3 months. So for 1 month, we divided by 3, we got 3,500 debit and credit prepaid rent. Everybody is fine?
Matic, do we rejournalize the depreciation or no?
Yeah,
the equipment.
absolutely. We are going A, B, C, D.
So isn't that C, depreciation of office equipment?
Is that what we have here? Let me see. Which one is C? Oh, yeah, okay. I'll change it here. So depreciation.
Okay, no, I just want to make sure that that's. that
No,
is part of it.
because it has to be done A, B, C, D.
Right.
Okay, so will be depreciation expense. Office, what is it? Office equipment?
Depreciation, yeah, of office equipment.
Office equipment, yeah.
Expense.
So
and
just
then,
write
yeah.
O, E.
And then
I'll just write
accumulated.
office equipment. Okay, and then here accumulated
2,000.
depreciation, all right?
Yeah,
So make sure that is your C and C. No, it's good, Lisa. It's good you told me, because that's what
Right.
A, C, C. Because when you will be taking a look at it, you won't get it.
okay.
Depreciation, accumulated depreciation, office equipment, and that is 35. Everybody is okay with this?
It
And
is
now-
2,000, it's not 3,500, right? Or
Oh,
not?
2,000, no?
Yeah, and see, it's
Sorry,
2,000.
yes, 2,000. Thank you. Yes, yeah. Okay, now go and see as to depreciation expense. You see it's 0. So on the 31st, you go tab, J what? 35.
5.
Yeah, just say it with me, because I'm just telling you, you can see it, but if you at least go with that, you will be okay. Okay, debit and then credit your accumulated depreciation, and your accumulated depreciation is also 0. So this is 31st, J 35. And this is why I write this. This is 2,000 and tab 2,000 tab credit. Okay, don't make a mistake here. And now go back and put 611 and 164. So 611 and 164. And notice here now, your depreciation expense under adjusted trial balance is 2,000, and your accumulated depreciation under your trial balance is 2,000. So we have made sure that we are comparing it is actually correct. So you have depreciation expense 2,000 debit, and accumulated depreciation 2,000 credit. Okay, so now we go with D. And D is here
Service
now,
fees.
pardon?
Service fees. On accounts receivable, no?
Yeah, accrued revenues, right? So we have debit entry first, okay? The R, because we are used to the other one, make sure you go according to how you do the journal entry. So how much was it? 1,000?
Yeah.
And what is it? Was fees on plumbing fee? No. Oops.
It
We
says
have,
service fees, but
service fees earned, yes.
Yeah.
So service fees earned 1,000. So just trying to make sure that you understand that, you know, you will not be able, no other class will take this time. And so and squeeze it like this to explain, because you have to know this accounting cycle before at least you get out of your courses. So that's why I am giving you this so that you are.
but accounting services, this is so we understand how to do it on the paper, and this will be brought into Sage 50 afterwards, right? This is what we're doing. We're learning
So
how to, okay.
it's exactly. So you see,
Okay.
accrued revenues means that somebody came and said, could you do my work for $2,000? On the 15th they came and they said, I'll pay you on the 15th of next month. On the 31st, you found out that you've done half the work after 2,000. So you're saying, oh, I did this, but I will have to record my revenue of this month in this month, but I will receive the money. Otherwise, what will happen? If you go next month on the 15th, what would you write? Debit to cash 2,000, fees earned 2,000. You overstate the revenue of next month and understate the revenue of this month. You understand?
Mhm.
So this way here, what will you do? When you will receive next month on the 15th, the entry will be debit to cash 2,000, credit to accounts receivable 1,000, fees earned 1,000. So again, you notice I got my 1,000 fees in this month, and I will get my 1,000 fees in the next month. So here, accounts receivable 1,000. So we will get 16,000 as a total, by the way, when we put this. Take a look here. This is 31st. J what? J
35.
35.
Very nice, Pulvasa. Now we got, look, it's working on my repetitions here. Debit 1,000 and the balance becomes debit of 16,000.
16,000.
Right? Good. And then you go fees earned 31st. You say J35 and credit 1,000. And the balance becomes 36,800, right? Good. Credit. It has to become 39,800. We'll see now. So if this is fine and this is fine, if you go back and take a look here, what's your adjusted trial balance accounts?
You have 3,000.
Right? And obviously this is, we just took 1,000. We still haven't completed it. There's another 3,000. So it will become 39,800 because we have two entries there. So, all right. So now we go E, and E is, where is my, okay, here. E is accrued wages. Okay. So accrued wages or accrued revenues. When they say wages, you know it's accrued expense, by the way. You understand? If they say accrued interest, it's interest expense. It say accrued wages, it's wages expense. So just make it a payable. Notice here, when it's accrued revenue, you make accounts receivable debit and credit your fees earned, because revenues are always credited. So I will now go to the after this, the last one, and then you will see. So this is wages expense. As soon as you hear the word accrued, it's a word you should really, this is what, 106 and 401. And wages expense is 500. Now, my expense took place, but I will pay them later. So wages payable, not accounts payable, because accounts payable is only used for merchandising to be paid, merchandise purchase. You understand? So this is a different
So,
nature
Mr.
of the.
Tariq, let's
Yeah.
say like last time when we were talking about those, let's say if we didn't have the account wage payable, we put account payable. In case there is like no existence.
If they don't give you that account, then you just use accounts payable. That's
Okay, perfect.
Okay.
Perfect.
I'm just trying to tell you that most, I mean, if it is a good trial balance or company, they will not mix up wages payable or interest payable with accounts payable. You understand?
True. Yes.
But
Thanks.
if it's not given to you, it's not given to you. It's you can just use accounts payable. You don't have to open an account because they don't ask you. Okay.
Okay. Thank you.
Everybody's okay with this? So wages expense. So now my wages expense, if you notice here, wages expense.
Can you
My
share,
wages
please,
expense
Mr.
is,
Tariq?
yeah,
Can you share, please? You are not sharing.
what is it I'm not sharing?
We are seeing just the pictures and not the work, the sheet works.
Can
see
everybody
it.
else can see it or not?
Yes, we can see it.
Yes, yeah, I can see.
Ah, so maybe I have problem.
Yeah,
Okay.
sometimes it happens there. So just let me know if you're, okay, so notice here, we have 1,500 and then an adjustment of expense of 500. It should become 2,000 there. And my wages payable should be 500. So if you notice, it's not there for in my books. So if you take a look here, wages expense. Wages expense is still 1,500. So we make the adjustment right here, 31st, J1, sorry, J35, and go debit your 500. And what's your balance now?
2,000.
2,000. Okay. And 2,000, just put good. It's a good way to get into the practice of writing DR when you know it right in the beginning. After a while, when you are pretty good at it, you don't have to write it. And the reason why I do is because I know that when people look at them, they don't really know if it's a debit or a credit balance, if you're just given balances to be picked up. So here, and then we have wages expense and wages payable. So wages expense is here, wages payable is up here, down here. So we got 31st, J35, and a credit of 500. They update the balance 500 and credit. And go back and put your account numbers. So this is 205 and there you go. F. That's right. This is 209, 205, and this here is wages payable and wages expense is 613. And we have basically we have 500 here. And obviously this is going to be 2,000 because there is a balance already existing there. So just with the general ledger, compare the balance, okay? 2,000 and 500. No, it's here. And 500 is going to be on this side. Here, this and 2,000 is here. So we're updated. And I think we have one more entry, F. Yes, F. Now I want you to pay attention to this. This is 31st. When somebody gives you the money in advance, it's called deferred revenue. Means the revenue has been deferred until in the future once you finish the work, only then it becomes. So what they said was that because I have done somebody gave me $5,000 in the middle of the year or the month, and then I started the work, but they said, okay, this is for the completion of 1 month work. But on the 31st, I completed $3,000 worth of amount of work out of the 4,000. So they said the balance should be 1,000. It's right here. Balance in the unearned fee should be 1,000. Okay. So they basically we adjusted by 3,000. So you debit your unearned because it has been earned. Unearned fees 3,000 and service fees earned. Do not put anything to do with cash or whatever or receivable. This is not the same. So how can it be a receivable when somebody already gave me the money in advance? So unearned, you debit your unearned and you credit your fees earned. So here we go. You debit your unearned 31st, J35. Now notice here, that's why I write this. So if we have 3,000, then you can actually very easily see that credit is for, it's a higher amount than the debit. And so the running balance is
1,000.
credit. Okay, make sure this is where some people sometimes they make a mistake. And fees earned here 3,031 and J35 and credit 3,000 and this will be 39.8. And now you go back and you go, you see, unearned is 202. So this is 202 and this is 401. And our last entry, and you notice the balance is here, 39.8 and 1,000 here.
We still have G.
But yeah, one more. G, and that's your rent expense, right?
And it is
So
rent
we get
expense.
Rent expense. Yeah, we put it earlier. The rent expense, and that is 3,500. And prepaid rent 3,500. Look, we are again doing it. We did that in the last course, all these adjustments, by the way. Do you remember? All of them were done.
Yes.
If you remember, we did the adjusting entries and then we closed this through the system. This is manual. Okay, so now all you do is you go back and you go rent expense. This is 31st, J35, debit of 3,500, 3,500 debit, and you credit your prepaid rent 31, J 35, 3,500, and this will give you 7,000 debit. And so we can go back and see, take a look here. We got 7,000 debit here and 3,500. We have a rent expense. We just transferred from here to my rent expense. So it used to be 10,005. So if you notice all these balances here, adjusted trial balance, if you want to check, and if this balances, go check that all my general ledger accounts are like these. Otherwise, you have an error. And then, so this is done. Everything is coming one by one. What happens is you cannot really, what you have to remember is that in my books, I have these balances. Take a look. Because I did the recording and the posting and then I left the books. I went trial balance on a piece of paper, worksheet on a piece of paper, income statement balance sheet on a piece of paper. And then once you have done that, your balances have changed with this. So how would you change in your general ledger? Just take what changed the balances, this column. So all your entries, debit and credit A, debit and credit B, if you record them and you post them systematically, you will get exactly in your books this balance. So now I have everything updated in my books. So my step number 7 is called closing entries. Okay, what does closing entry means? Closing entry means it does 2 things. We do it for 2 reasons. This one, we do it for, why do we do it? Because we know that our adjustments which we did on this paper have not been updated in my books, in my records. So I have to make sure I can't go straight to my general ledger, start scratching, changing figures. It's always by debits and credits. So the debits and credits I put under the adjustments, I record them, and then I post them. And I'm done with that. Now, all my records are updated. That is the reason why we do it. Where do we do it? From the worksheet to the journal, then to the ledger. It has 2 steps. Take a look. Recording and posting. Don't mix it up. What you did recording in step 1, and then you did posting in the second. In this case, you have recording and posting, the 2 steps at the same time. So if you take a look at the accounting cycle, everything you have in the books is called recording and posting, recording and posting. Same thing on step number 7, 2 steps. So you did the closings by a computer. So you didn't really see what happened. It just converted all my revenues, costs, and expenses to 0. I'm sure most of you don't remember what I told you why do they become 0, but I'll again repeat for you. So now you have to do the posting. Why? Because everything is updated. And the reason why I do the closing entries is for 2 reasons. One, so that I can actually make sure that all my revenue, cost, and expense accounts are reduced to 0. They are called, if you haven't really read anywhere, I will again tell you, income statement accounts are temporary accounts. What do they mean by that? These are temporary accounts, means they will be closed, mean they will be reduced to 0. If you do not like the word closing, the recording and posting closing entries, these entries basically reduce income statement accounts to 0. And second, transfers the profit or loss into my capital account. Okay. You can do it mechanically or memorize it, but after a while you start to understand why. I will tell you why, but I know a lot of you will not remember. If I do not really close this gives me 1 month. Means when I say close this, if I do not really transfer my revenues and my expenses into my capital account, then on starting tomorrow, 1st of January, at the end of January, I will have 2 months of revenues, 2 months of expenses. That's not what we want. And my net income is not transferred here. So, my right side of the equation, liabilities and owner's equity, is out of balance by 30,190. You take a look here. I'll just give you an example. Okay, here you go. Insert cells down. Okay. So let's say here, I'm making a journal entry. Just take a look at this. Debit to cash. I made $5,000. And I credit, let me do it a bit better. Here it's 5,000. And this is my revenue. I'll just write revenue means fees earned. The revenue. Okay, right. And I credit 5,000. So take a look here. This is debit. This is credit. If you notice here, if I take a look at this balance sheet equation. So cash goes where? Under which category? Cash is considered what? Assets, liabilities, owner's equity. What do you call them?
Asset.
So now notice, if I post this 5,000, right? Everybody with me? Here.
Mhm.
I'll take this off. My total assets are how much now?
5,100.
So now notice, revenue doesn't belong here or here, correct?
Mhm.
So that means my equation is out of balance by how much? 5,000, right?
Mhm.
This is 100.
Yeah.
So assets are equal to, take a look. Assets are equal to liabilities plus
Honor.
Owner's equity.
owner's equity. Good. Everybody's with me now? Okay, now, because this is how you will understand. And so I'm out of balance by 5,000. Okay, now let's say I have another, I pay my expenses. So take a look at this. I'll just read the expense. 2,500. And I credit cash 2,500. Pay close attention now. I'll ask you a question. How do you calculate your profit or loss?
Well, minus.
Yes, revenues is how much?
That's 5,100,
5,000. Very good. How much is expense?
2,500.
Okay, everybody, because this is very basic, but it will give you a very clear understanding again, because I'm repeating, how do you calculate your net income on it? So we have a net income of,
2,500.
very good. Here you go, 2,500. Good, everybody is with me now. Okay, now take a look. So my cash went up by 500, right? Then it is minus 2,500, correct? Everybody with me here?
Yes.
Yeah.
So now I have how much? 2,600? Yes or no?
Yes.
Okay, 2,600. How much is on this side? 100, right?
Right.
Okay, so this is 10, and this is 90.
Nine.
This is all arithmetic. So now what's the difference? 26, right? And this is 100. My debits are higher because these are
Yes.
credits. My
Yes.
debits are higher than the credits by how much? 2,500.
2,500.
Good. So take a look here. It is basically my net income, correct? My cash from the operation of the business. I showed you this. I showed you this. I started, the assets I have is this and this. So assets are equal to liabilities plus owner's equity. Okay, I mean, if you want, we can just make it, it might be easier for you. We can make it 100. 0, 100. Okay, now, so tell me now, whom does this $2,500 belong to?
To the company.
To the company or the owners, right?
Yes.
So now when I do the closings, follow me. I will transfer my debits and my credits into my capital account, and this will become balanced out with $2,500. Credits are higher. So when I will debit my revenue and I will credit my capital, this will become 5,100. Then I will debit my capital by 2,500 and I will credit my expense. So my revenues will become zero and my expenses will become zero, and this will become 2,600 here. Okay.
Yes.
So how do we do this? Not by minus plus. So I just want you to understand that your balance sheet is out of balance but before closing by the amount of profit or loss. Take a look right here. Before closing, I have 2,600 and my liabilities and owner's equity is 100. But this 2,500 belongs, I have it right here in my assets. But the claims are not there yet. Why did we do this? We did not really credit or debit my owner's equity or capital account because I wanted to make sure that I get a detailed account of my revenues, expenses, costs, whatever, so that I can actually control my business. After I finish this control or this detail, then I will take all my services revenue into income summary to capital, all my expenses into income summary, and from income summary to capital, and then withdrawals to capital, and both sides will balance. So just to take a look at this, take a look here. Here's your situation right now. I'm going to close now. When I close, what close means, I will make sure that my revenues become zero. So it's a credit balance, correct? This is a debit balance. So in order to make this zero, I will have to debit my revenue and credit my capital. So now I got 5,100 here. Then I will have to credit my expense and debit my capital. And so now I'm left with 2,600 here and 2,600 here. And they became zero. So why did we do that? Because tomorrow morning, I don't want to have last month's 5,000 and last month's 2,500 expense. I won't get my 1 month of next month. I'll get 2 months if I don't do this. So let's see, it'll be more clearer when we start doing it. And we all make sure you know, step number 7, 6, and 7 are basically taken right out of your worksheet. Step number 5 is taken out of the worksheet. Step number 6 is taken out of the worksheet adjustment. Step number 7 is taken right out. We only have to close these accounts and transfer them into my capital account. But the process is that we do not go straight into capital. If you notice here, I gave you these accounts you didn't see before. They're in logical order. Capital, withdrawals, income summary. Summarizes my income. Then these amounts will be transferred first here. So this will be credited, this will be debited, and this will become zero, by the way. Let me see here, insert, shift down. All right. We will add one line so that copy. I think there's one less line in there. Okay, let's see it. If you do a few times, it'll be. So just take a look here. Worksheet. So tell me, what's the first account? So all you do, you go into income statement column. What's your first account in the income statement column?
Income,
This,
Revenue?
this is the closing entry number 1, okay? It's right here. Closing entry, you have 4 closing entries on the 31st.
service fees earned,
Okay, so what you do is you debit service fees earned. It's a credit, you debit it. And you will see the effect when I post it. How much is it? 39,800. It's very systematic if you just pay a little bit of attention. Now, this account you've never heard, but we are transferring all my revenues, costs, and expenses into an account called income summary. It's given to you. I will show you. 39,800. Okay, now I will post it. Let's post. Go to which account? Service fees earned. Go to service fees earned 31st. And you give me the answer. J35. Debit 39,800. What's your balance?
0.
0.
0. Very good. Everybody with me now, okay? Now go back and put 401. Now post income summary. So here's your income summary account. See this? 31. J35. Okay. Credit. So you debit it here. Credit 39,800. Update the balance 39,800. Important for you. Make sure you write CR. Very important, because that will take you through. Otherwise, you might have a problem in understanding. If you just follow your debits and credits, you will not make a mistake. Okay, so you go here and you write 311. Everybody is okay now? So now what happens here? Take a look in the general ledger. My services fees earned is 0. All my credits, remember, journal entry system is a very powerful system. You can transfer any amount from any account to another account. You debit one, credit the other. You understand what I'm saying? If you want to make it 0 anything, I can credit this and debit another account, and this will become 0. Same thing here. It's a debit balance, I'll credit it, it'll become 0. Here's a debit balance, I'll credit it, it'll become 0. But obviously, I will credit this and debit my income summary. It's because I'm transferring everything into income summary. Okay, so now take a look. Go back to your worksheet. What are these balances, debit or credit?
Debit.
Credit.
So in order to make them 0, you have to credit all of them, right?
Yes.
Okay, now, instead of doing one by one with income summary, I can just write the income summary once. I take all the debits, which is 9620, right?
Yes.
Okay, so take a look here. Debit your income summary, copy. And this will be here. And this will be on the 31st. This is closing entry number 2. There are 4 entries, okay? Make sure you know. So 9,620. It's a little.
Wrong column. Wrong column, sir.
That's right. I'm getting tired or what?
Yes, you.
Take a break.
9620. Okay, here. So 9620. And now credit each account one by one. Don't do expenses and then total, because there is no such account called expense. There are only expenses which are depreciation expense, wages expense, supplies expense. So you have to make sure that you just make sure that you have each one of them credited here. Depreciation expense, copy, and We'll go here, we'll put it here. Anyway, because I cannot really, so, and all you do, same thing. All of them will be credited, right? You cannot just write total expenses here, because where will you post? It has to be posted one by one to each of these accounts. So take a look here. What's your net income in this case here in our company? 30,180, right? When I summarize all my in my income summary account, my balance should become 30,180. Otherwise, so now post 9620. Okay, so we go here, income summary, debit 9620, J35, 31st, and your balance should be 3180 credit. Very important that you write this. Right? Because that's my answer here. Take a look. This went into as credit into my income summary. This went as a debit, and so this was a credit in the income summary. This was a debit. My balance should be 30,180 credit. Credits are higher, so take a look here, and then you go one by one and go 31st, J35, and credit 2,000, and that became 0. And you go 31st, J35, credit 2,000, and this becomes 0. And this will become 31st, J35, credit 200, that became 0. Then you got 31st, J35, 1,000 credit, and this is 0. And then you have the 31st, J35, credit 3,500, and became 0. And the last one, 31st, J35, credit 920, and that became 0. Oops. Okay, and now go back and put your account numbers. You got here 311, we got 611, 613, 615, 617, 619, and 621. And now I have everything in my general ledger. After doing this, all my revenues, costs, and expenses are 0. I'm transferring what belonged to my, you see, if you had done debit to capital, credit to capital, what would you have? Debit to cash, credit to capital, 39,800. Debit to your capital and credit to cash by all these, which will be 9620. So your capital will go up by 30,180. But that would not have given you your detailed account of each and every account which you prepared, and you do it every month, and you compare, and then you have meetings, and you say, how come the amounts in sales is going down, is going up? How come my payroll is very high? How come my other expenses? That's what they do the meetings for. That's how we control the business. So I have 4 entries for this. So now notice what will happen. Take a look, go back here. Look, everything is 0. They are now being shifting. They have been shifted up towards income summary. And now I will take my income summary and transfer it into my capital. Tell me, that is the reason why I wrote this. How will I make this 0 and transfer it into my capital? This here. Debit to what? Credit to what? How will I make income summary 0? When I record, what do? I debit to what and credit. When I want to make income summary 0, what do I do to income summary? Huh? How will you make this balance to 0? Debit or credit?
That should go to debit.
Debit. So, okay, everybody is okay with that? So debit your, so this is number 3. 31st. And you debit your income summary. So we go copy and paste. And that was how much? 3180. 3180. And I want to transfer it into capital. So I will credit my capital account. Look here. I want to transfer this into this. So I credit my A large capital. So credit A large capital. 30180. And now we will post it. Take a look now. Debit 30180. J35. 31st. The balance becomes what?
0.
0. And now credit 30180. And that will become 136,180 credit. One 106 plus 30,180 is 136,180. J1, sorry, J35, and it's the 31st. And the last account, which you have to transfer into capital, because everything below capital should be 0. So if you notice, they're all zeros, but one is left. Withdrawal. Withdrawal is a debit balance. How will I make the withdrawals to 0?
Credit.
Pardon?
Credit. To make
Credit.
it credit.
Okay. So you credit this and debit capital. Okay. Because everything goes into capital. So this is 31st. And this is your, so this here is 311 and 301. And this will be here, debit to A large withdrawals. Sorry, capital. And this one is very confusing for students. So you have 10,600 debit and credit your withdrawals. A large withdrawals. It's 10,600, and this is debit of 301, 302, and this is the 4th entry. And look, you go back here. I'm sorry, here, and look, this is 10,600. 31st. Can you give me the balance there? It should be, the balance there should be 125,580. Give me the balance. Is it 125,580? Here. A credit
Yes.
of 136,180 minus 10,006 is how much?
Yes,
Yes.
yes, they,
125,580.
125,580.
And that's your balance also in your work, in your income balance sheet, which we prepared earlier. So now notice everything below, when you're doing this by 10,600, and this becomes 0. And so this is J35, and this is 31. And look at this. Everything here is 0. Why? Because tomorrow morning, I will start and I will have new revenues and new expenses so that I can now get my net income or net loss for next month. So closing is done for 2 reasons. First, to reduce all my revenues, cost, and expense account to 0, so that tomorrow morning, all transactions will be for next month for revenues, costs, and expenses. Otherwise, if I don't, then you will be carrying last month plus this month. So at the end of January, you will have 2 months. And second reason, at the same time, make sure that I transfer all my profit or loss into my capital account. So
So you mean we have always to close it as 0?
Yeah, they're all, everything is because there's one more step now, and that is the trial balance. And the trial balance will stop here. You see, that's when I said, well, that was the reason why I said, do not pick up 0 balances. You understand, Samia? That in your trial balance, do not pick up 0 balances.
Yeah.
So you should make sure that you pick up a post-closing trial balance, we call it, that it should stop here.
Yeah. Okay.
Everything below, if you have any balances, then you didn't do the thing right. This is 0, 0, 0, 0, 0. So you remember when we closed, and I said, pick up the trial balance on January 1 in your last course. Everything in your revenue, cost, and expense was 0. And then we reversed, and then the reverse balances were there, which were abnormal balance. We did that. So this is how then becomes 0 automatic on that computer. It doesn't just, you understand? The computer does these entries, by the way. After you did the adjustments, right? Then you didn't do the closing. You just told the computer, advance the date and close. And it did it for you. And then I said, okay, pick up a trial balance. And the trial balance, the last balance was your capital account. There was nothing else after that. Then we did the reversing entries. Okay. And so if you notice here, this is what I was trying to explain to you, that before closing, look, before closing here. You see this? Before closing, my owner's equity or my liabilities and owner's equity side is actually out of balance by this amount. Here. I transferred it, then it balanced. Why? And you'll see it now, because I'm going to take a trial balance. It's a trial balance, but it's called post-closing. Don't get confused with the word. It says after closing. That's what we mean by post-closing. And if you notice, you'll pick up these balances one after the other, and your last account with the balance will be this. And it should balance. Otherwise, you're wrong. So let me see. Where is my post-closing trial balance? I have somewhere. Okay. 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 Normally I make that. No, okay, hold on. This is what we'll do. Okay, just two. And what we'll do is this, we'll make it step number, let me take this. We'll make a post-closing trial balance here. Okay. So this is step number 8. And this is called post-closing. Always taken from the general ledger. So let me here insert some accounts so that we are okay. Insert. Okay. This is wrong, so I'll take this off. And then this is 164. And this is accumulated depreciation office equipment. And then we have
Patrick, where
wages.
did you take your template for the step 8?
Pardon?
I said, where did you take the template for step 8?
For this? Here,
Yes.
just
Oh,
take
step
that
3?
and,
Okay.
and then just take that and then adjust it accordingly. This is
Okay,
a
step 3.
205, just add those accounts. I will send you this, so
Mr.
but
Tariq,
you can make it right now if you want. Yes. Wages
Yeah.
expense, and you see this here, I will need depreciation expense.
Mr.
Then I
Tariq.
will, yeah,
But just before to go further, because I don't know, maybe it is irrelevant the question, but now I was thinking that what's happened with the return earning and dividend paid? with
okay,
this?
that's a corporate account.
Yeah,
Okay,
we are talking now on individual.
in corporations, we don't call it capital. We call it retained earnings.
Okay,
Because
so
it does not belong to, it's the same, the purpose of it is the same, by the way.
so basically we replace those
Yeah,
capital
so what
account.
we have, Osama, what we have is we have common stock, okay? Let's say
Yes.
we put $100 on common stock, 100 shares only, all right? Now, we open another account called, we call it retained earnings. Earnings retained, not distributed from the profits, okay? So let's say you made here 30,180, right?
Well, actually, but because I don't want to bother my colleague with the question if it is irrelevant, but
No,
principle.
it's because all there is to it is this is a sole proprietorship. Means one owner, one man owner. When you have a corporation, we don't call that capital. We call it basically common stock first, because what you invested, and then you have retained earnings. Now, retained earnings are all earnings belongs to the corporation. And if you want to distribute it among the owners, then you call it dividends. So withdrawals there are called dividends. So you debit your withdrawals and you credit your cash. And so because retained earning is a credit balance, when you debit it, it gets reduced.
Yeah.
Okay. So instead of one account, here we have two, right? So this is capital, which you can just say retained earning, the whole thing. All your profits and your investment come in here. But if you want, you have to open up a dividend account, which basically is withdrawals account.
That
And
if there is
if
more
those
than
of
one
yeah,
partner.
and if those of you who are not familiar with this, by the way, the amount you take out of the company, if it's a corporation, the money you actually take out and distribute among yourselves, you have to declare it in your personal tax declaration. So corporations are double taxed as a corporation, And then when you take the money out, then you declare it in
You
your
have
own
again to pay
personal
for it.
income tax. Yeah, okay. So
And
that's,
you have to-
that's okay. You get the idea, right?
Yeah, I got the idea because
Okay.
I think
No, but
in
these,
real,
yeah, but these accounts, they just change names.
yeah, but in real life, you are mostly working for corporate accounts.
That's
Sometimes there
right.
are,
No, but there are majority of the companies are sole proprietorship. That's the backbone of an economy. You understand?
I'm still new with the system here.
Yeah, because I'll tell you what. There are three types basically in our economy. There is sole proprietorship, there is partnerships, and there is corporations. So 70% of the companies in our economy are sole proprietorship and partnership. Partnership is the smallest number. 30%, 25 to 30% are corporations. But 70% of the revenues is generated by 30% corporations, and 30% of the revenues is generated by 70% sole proprietorships. That's how it works. So
And the taxes
you
will
can
be
see
more or
the
less.
enormity of the bigness of the corporations, by the way.
Yeah,
So,
taxes very
and
good.
don't forget, corporations basically at one time used to be, a lot of them used to be sole proprietorship.
We need more
Even
time.
now.
We need more time with you, Mr. Tariq.
Yeah,
That is
as
not enough.
companies expand and as they keep on making profits, then they get some more investors. Because remember, hedge fund companies, they have billions, trillions of dollars on the sidelines, and they watch where the profits are high, and they'll come and pounce on you and say, "You want to go corporate? We'll finance you." And that's how we do it.
Just up to I win the lotto. If I don't win a lotto, I'm not going to corporate.
That's right. Okay. So going back to our post-closing trial balance, we're just going to now, and so wages expense. So here it's 611. Depreciation expense. We have, you can actually just take, those of you who are doing, just take the chart of accounts and put it, take out your income summary account, and that's it. 615 is 615 is insurance expense. You know, normally when we pick up the post-closing trial balance, we go one by one from here. See this? Now every one of them have a balance. But I'm just going a little bit shortcut here so that we, and then we have 617. And this is going to be your wages is done, insurance is done, office supplies expense. And 619 is rent expense. Okay, so we have it right here. So we got 16,000, 4,800, 16,000 debit, 4,800 debit. Prepaid insurance is 10,200 debit. The prepaid rent is 7,000 debit. Office equipment is 136,000 debit. I think so. No, 68,000. And depreciation is accumulated depreciation is 2,000, is it? Yeah.
Yes.
Credit. Then we have accounts payable is 3,400. Credit. Then we have unearned is 1,000 credit. And then wages payable 500 credit. Large capital is 101. Now, make sure you go to the general ledger for this one because it's not given in your worksheet as such. So you will have to go and check here. 136, 180. No.
Would it not be the 125, 580 or no?
That's right. Yeah. What did you say?
25, 580.
125, 580 because I cannot see it there. 125 because your thing is on top of that. And then you have your this here. Okay, 125, 580. Then withdrawals is, so that's it.
1060. And then we have the wage expenses
Yeah,
too.
so,
no?
so basically here, check it out. I didn't have to write it.
Not balanced right now.
Yeah, hold on. Let me see what's the problem. I didn't finish yet.
Still
Okay.
2,000.
Yeah, I think it's my accounts receivable. No, it balanced. Did you balance?
Yes.
It balances.
Yes.
Total.
Mm.
Good?
Yeah.
Okay. So you can computerize it.
What was your balance? What was your total?
132.
480?
480.
Okay.
132, 480. Everybody okay with that? So,
Yes, sir.
okay, so now let me see. Here's the chart of accounts. So once we create it, and this will be basically a, we've done it before, but you need to do it again, and then we will, I will see the next part when we start, so you'll be much more easy with your handling with that. So let me see here. Okay. No, okay. Exit. I'll do it in this so that you can open it. Okay, so let me stop sharing and share and share and share. So everybody can see my screen? Yes?
Yes.
Okay, so go to create a new company and say, okay.
We
And,
have to download it now, Tariq?
hey, no, because we're creating from zero.
So, sorry, I did not follow from where we have to download this
Okay,
one.
no. With the problem we just finished,
Yeah,
you just open up your Sage 50, the first screen will show you create a new company. So now we're going to create that company.
one moment, let me open that.
Otherwise,
Create new
I'm
company.
just going to set up the same company I did manually for you.
Okay,
Okay. So you should get, once you say create your own company, you should get this screen.
Right.
Okay. Maybe Maybe I should get that set up notes for you, which I gave you last time. Okay. Let me see. Let me see. Hold on. I will send you the note. Okay, Champlain. All right. Okay. 101 cost accounting. CPA accounting. There you go. Okay. Okay. Copy and see and here for winter. Okay, and then we have there we got experiment. So here I'm gonna now upload it to your Teams. First of April.
If it's only
And
the key, you can put in the chat maybe.
file. No, it's I have the thing here with me, so I'll put it to you for you right away. Okay. So if you want, you can take Sage 50 accounting setup. Can you see my screen now?
Yes.
Okay, so here there's a, let's see, 25. Yeah, but you see, we'll use these 25. You can always change them according to your year, but it's just the basics. Okay, so what I just did, I clicked on my Sage 50 and I said, create a new company. And the next screen, it says click, create a new company. And then your next screen, you should say, okay. And you say next, then write your last name and the name of the assignment. So if you have this, if you have it in front, but I will keep on telling you as we go along. So let me go back into, so just to first explain it to you. So if you follow each and every word, you will be able to actually create a company. And then the first thing you do whenever you create a company, the first thing you have to put your chart of accounts. The system doesn't have anything in there. It's just a file they created. And it tells you here, if you want to do your chart of accounts, it says go to company on the left-hand column of the screen. So it tells you that on the Sage 50 where you have to go. Click on chart of accounts in the lower middle section of the screen. And then click file and then create and enter the numbers and names of all accounts. How do you do it? If you don't remember, that's what I'm going to do. So first part we'll do right now is to create a company and then create a chart of account. So follow me, and it's not really difficult. You will be able to follow me. You've done that before, so don't worry about it. And you can stop me if you So if you notice the next, when you say create a new company and you say, okay, this is the next screen which you actually get. Then you say next, and then you get this, this screen, the new company. So you write your name. So we will write, what was the name of this company? Management, Lodge Management, Lodge Management Services. It's too bad I cannot make the screen bigger because that's the way it is limited by the, so it's, you can write the address or whatever if you have. Then because we are in Quebec, we'll make sure we don't reuse Alberta. And Alberta, again, they are also trying to separate, so we don't know which way to go.
Tariq, we have to put our name, right?
Yeah,
Instead
yeah,
of our
but
name.
no, but you can, in this case, you're creating yourself. You can put this name of the company, Lodge Management Services.
Okay.
That's your company I gave you. You know,
But we
it's
have
the-
to put any address, any street or.
yeah, that address is yours, whatever. I'm just getting you through just the basics of those. Then you can write your phone number, country, whatever, it doesn't really matter. Everybody's okay with that?
Yeah.
Okay,
Yes.
then you go next. And then here you write your fiscal period. For purposes of our, to make it simple, just write 01/01/2025. This 1st of January is the fiscal year starts on the 1st of January, 2025. And if you want, you can just go tab. When you go tab on the right side, it automatically fills it up for you. On the right side of your keyboard, there's the word tab, right? If you do tab, it will show you earliest transaction 2/25/001, and then the fiscal year end is 2025 12/30, December 31st, 2025. Everybody with me? And it's written on my steps. I just want you to make sure this way you can avoid all these manuals. And so go next. And this appears. Be very careful here. Do not just click next right away without, you should click the last item. Let me build the list of accounts myself. Because if you don't do this, then the system itself gives you a chart of accounts, which you can modify, it doesn't matter, but it's a very long chart of accounts. And it also gives you, because if you ask them that the system gives it to you, then you can also choose what kind of business you're in the next one. Say, okay, we say next, and you say yes. Now here, these are the type of companies they have. Accommodation companies, agriculture companies, construction companies. We will just leave it as others because we will create the chart of account ourselves. You understand? So you go, if you find that you have some company here, food and beverage, you can click that. They'll give you a chart of accounts, which is closer to, so, but we don't want it. So we go next, but make sure you say create a chart of account myself. Next. And here, enter the name of the company file. Lodge Management Services is already there because you wrote it. And it tells you where they are creating your company. Okay, Access 2026 window. So you go next. And if you want, you can finish. Otherwise, I can go over it again. I will cancel it.
It's a little warning which I received.
Yeah.
It's about
Don't
the
worry about the
location.
warning. Yeah, go ahead.
It's about the location. The location you have selected is in a folder for cloud storage.
Yeah, so don't do that. You can change the thing to C drive, no?
C drive.
Because otherwise it will be on cloud. You can go on cloud if you know how to access your cloud. That's okay. So I'll go over it one more time. Here's your first screen. And what do you do here? Click on what? Can you see my screen?
Create a new company.
Yeah, so say okay. When you say okay, the next screen is this. You just say next. Take a look on my notes. It will say go next. And here you write lodge management
Management services.
services. You'll be so happy that you can create a company for yourself too, if you want. And you just go. It's something to be proud about because it's not done by everyone. Go next. And here, just keep it simple, 01/01/2025. And go tab. And once you do tab, it fills it up. Sometimes if we are computerizing a system, earliest transaction we can change because we don't want any transaction to be made before. So if you have a trial balance, let's say you're trying to start from July. So you can say the earliest transaction you can actually go is 01/07 and 2025. And so it will not let you know, it will restrict any transaction before that because you've already got your trial balance ready. Okay. But anyway, so go next. And here, again, be careful. Go, let me build a list of account myself. Everybody with me? Next. And next, you say yes. And others, you keep others and you say next. So, Abdul Wahid, here, enter the location where you will like to store.
Yes,
Put it
I'm
on C
already-
drive.
Now it's doing what? It's creating database.
Okay, so go next and finish. And once you finish, it'll create your file, the database for you. So this is what's happening on my computer.
Your computer is very fast.
Hey,
I just get 18% so far. Oh my God, it's so fast, Tariq.
no, because I have a
Oh, it's done. Mine is just 20%.
yeah, it's okay. I'll wait for it. And what you will get is this, and you just say close. And once you close, you will get this screen. Where did it go? And you can just, there will be a sub screen. You can just close that and you will get this screen. There will be a little small screen too. You can close that. And if those of you who get this screen, just go on the right side. If you see my cursor, switch to enhanced view, and it will change it to this. Some people like that all the journals in front of you.
It's still 36% only, Tariq.
Don't worry about it. It'll give you that. Some of you already got it or not?
Yeah, it's
Yes,
okay.
sir. Yeah.
Yeah.
So you see, all you have to do is you just make sure that you have the screen open in front of you. Here, chart of accounts. And I'll just write the numbers which you have to use. 1010, 1060, 1240, 1280, 1310, 1630, 1640, 2010. Just because it takes thousands, it doesn't take hundreds. So I'm just adding zeros. 3010, but just follow my numbers because there is a certain restriction in further down. 4010, 61110. So here for your 600, all you do is you write 5611, 5613, 5615, 5617. Oops.
5619.
Yeah, 5617, 5619, 5621. That's it. Okay, so just make sure these are your numbers for your Sage 50. All right. Now, just to give you an idea there, take a look here again. And where's my notes? Accounting line here, accounting notes here. See this? What's the first thing you do after you create?
Chart of account.
Chart of accounts. The system doesn't have anything. You have to do the chart of accounts. So it says chart of accounts. Where do you do that? Go to company on the left-hand column of the screen. Here. So let me show you. If you follow those lines, you will see that you will get it here. Go to company on the left side. Can you see a word company here?
Yes, it's down.
Go to
Up.
company. Okay. Then go to,
Chart of account.
then go to chart of accounts. And you will get this yellow screen, right? Hold on. Here's your, okay, now, okay, if somebody is still behind, I'll hold on. Most of you got that done? Abdul Wahid, did you get it?
Just 69.5%.
Okay, all right, no problem. Don't worry about it. So those of you who are still waiting, you can go here. Take a look here. File, create, and you'll get another little window. If you see my notes, you will see it. Create. So this is the window which will come on. What's your first account number? 1010. What's the name of the account?
Cash.
Cash.
Cash. And all you do, leave it as is, go here at the bottom, create another. Then 1060, tab, accounts receivable, create. Then 1240, office supplies. Create. 1280, prepaid insurance. Create another. 1310, prepaid rent. Create another. 1640. We have office equipment. Create another. 1650. What is, no, I think, let me see, did I?
163 was office equipment, 1640 was accumulated.
Okay, hold on, let me fix that. So let me go here. We want to say no. Where is that? 1640. So it should be 1630, right?
Yes.
30. Even close. All right. Here, 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 and create and share, and share, and here. And so now 1640, and you will get accumulated the EPN dash office EQPMT, and again create another, and now we have 2010, and this is going to be accounts payable, and then create another. Do not change anything for this. So what was the next one? Was 2010, 2020, right? Okay, that's going to be unearned fees. Yeah, unearned fees. 2050 wages payable. Okay, 2050 wages payable. Create another, and then you have okay. 2050 is done. 3010 large capital. 3010 a large capital. Create another. There is one account, don't touch that, is called current earnings, which is created by this system itself. And this is going to be and every time you will create, they will have that. With withdrawals, create another 4010. 4010, and that is service fees
Do you have
earned.
something after 3010?
Huh?
After 3010, it's 4010, right?
That's right.
Okay.
No, 3010, 3020. Withdrawals. And then we have 5611, and that's a depreciation expense. Then you office equipment. Then we have 5613, and that is wages expense. Create another, and we have 5615, and that is insurance expense. Insurance expense. Create another, and then this will be office supplies expense. What is it now? 5617. And create another, and then we have rent expense 5619. Rent expense. And then we have the last one is 5621, and that is called utilities. Okay. Now, even if you have not finished yet, I would, yeah, go ahead. Somebody asked me a question.
4010?
Pardon? 4010 is service fees earned.
Okay.
if you want, you can ask me the name of the account.
I took a note while it was downloading. It's been downloaded, but I will create afterwards.
Okay, so you see here, now I'll show you. Here's your chart of accounts we created, right? But all of you, you make sure that you know the system will not work right now because I have to have a heading and a total for each one of them. See, G is group account, H is heading, T is total. So I gave you those accounts. Let me see here. I'll show you now. It's in my notes. Okay, so here's my notes. Here, go all the way down. Here are those accounts which you have to add. Add these accounts, otherwise the system won't work. Here's my notes. At the end, they give you those. So it's very easy. I'll show you as to how you can actually do that. Look, heading is 1,000. Totals are 1,999. So asset should have a heading, and these accounts you cannot create except for a heading and a total because they are restricted by the system, the software. 2,000 are liabilities, 2,999 is total liabilities. 3,000 is owner's equity, 3,999 is total owner's equity. 4,000 is revenues, 4,999 is total revenues. 5,000 is expenses and 5,999 is total expenses. And so if I go here, it's the same thing, except here you will have to change the default. You see this here? So we go create. You can use this red book if you want. And this window will appear. And so this window, let me share it with you. And this is right here. So now, first one, 1,000. And you go assets is the heading. Okay. Now, notice here, you see this? It's already defaulted for group account. If I want to create another, it won't. Take a look. You see, there is a account number cannot be used with the group heading. Okay, so you will have to have a group. It's a heading here. And you go create another. Now you create 1,999. What's 1,999? Tell me here. What's highlighted here? Highlighted means what is in dark letters.
Group total?
Yeah, it won't. You see, if I do create, it won't let you. So you have to go and click on group total and go create another. Okay, enter. If you want to enter this name, okay, please enter the name. Okay, we didn't. So it's total assets. The next heading is 2,000. Those are called liabilities. And this is a group heading. And the next one will be 2,999. What would you call that?
Reliability.
Liability.
Total liability. So after a while, it becomes quite simple. You get used to it's a mechanical device, so it's not as if you cannot really. And so total liability, the word total means group total, okay? 3,000, owner's equity. It's just the same thing that I've been telling you on that 100 are assets, 200 are liabilities, 300 are. So here it's 2,000, 1,000, 2,000, 3,000. Owner's equity is a group heading, and 3,999 is the owner's total owner's equity, and that is going to be your group total. And create, then you have 4,000 revenues. And this is a heading. 4999 is total revenue. And anyway, I have given it in the notes, so you should be okay. So this is a group total. And you have 5,000, and that is expenses. And that's your group heading. And now you will go 5999. That's your total expenses. And that is your group total. And save and close. So once you do that, here's your chart of accounts. Take a look. You see what I was saying? Heading and a total. Every group should have a heading and a total. If you don't, the system won't work. It'll give you errors. Heading and a total. Heading and a total. Each group of 1,000, 2,000, 3,000, 4,000, 5,000.
Mm.
Is anybody okay with this?
Just what is the X here?
I told you,
in the
don't worry about it. I said the first thing, there's an account which is created by the system. Don't touch it
Okay, yeah.
because it's something the system creates to change the year. Okay,
No.
they use that. Your current earnings for this month will keep on coming here automatically. Okay.
Okay.
All right. Anybody else has a question? So everybody is okay with this?
Just
And-
if we have to like if we have an error, how to fix it? Because I try with the edit, I didn't.
Yeah, okay. No. Let's say you made a mistake. Is that what you're asking?
Yeah.
Okay, look, if you made a mistake, for example, in the spelling or the number, right?
Yeah.
So long as there are no balances, you can change the number. Okay? So all you do, you're watching this, click here, click twice, and you will get the other window. Here. This window. It'll take you there, okay? Can you see this?
Yes.
So you can now change this name or the number. And once you do that, you will just say save and close. And then it will do it. Okay.
Okay.
So, but if you put the figures in it, like trial balance, and you want to change the number, then it won't change the number, but the name you can. You follow me?
We can
Before-
the
so
number,
make
the
sure-
shared number, if we have error in the shared number. Because
you can change it, but before you do your trial balance and post it.
we have to post it before. Okay.
If once you put the figures in, then then you can, because it restricts it. Otherwise, people would change it. No.
Because I'm trying to add it because I put the number for the different account. But so if I have to go to the same number with a different account, it's gonna be asking me. It's you put this number for the other accounts. That's why.
No. Because you put it already. You will have to change the name only or the number. Doesn't matter then. You don't have to re-enter it.
Yes.
You go to the same account and you can delete it if you want.
This is what I am asking. I tried to delete
Okay,
it.
here.
That's why I couldn't delete it.
Here, you see this here? Or file, can you read me the names? Read me what is there now.
We have
on the top.
open, create, remove,
What does this
Modify.
mean? Remove.
Remove the, you mean the account, right?
Yeah, that's it.
Okay.
I
Okay.
mean, they wouldn't create a system which is so difficult.
Okay. Thank you.
But it's a mechanical device, you know. That's why you have to go through this. That's why I take people through this. So that, and the more you do, the more mistakes you made, the faster you learn.
Yeah. Right.
Okay. Good. So like if right now, if I go and, you know, you can click this icon also, it says remove. If you notice, if you see this,
Yes.
okay. And if you go on the red one, it says create. Or
Yeah.
you can go file and you can do create, remove, whatever. Okay.
Perfect. Thank you.
And then once you remove it, you go back and you can then create it, whatever you want
Mhm.
to that number. Okay, so we will stop here. We will stop here. And because now the entering of the journal entries is not really that bad. I'll do it tomorrow. And then we will do another problem with the system itself. But I want you to get a little bit easier with this. So until you create your chart of accounts, you put in your entries, you don't feel good about it in the sense you will still be hazy. But once you do this, then you get a little bit more easy with this. Then you do not really think, oh, if I press this, it will disappear or something. Nothing is going to happen. All right. I mean, it does not really create any problems if you put a wrong name, you put a wrong amount. You can always fix a wrong journal entry. It's not a problem. Okay. So I'll see you tomorrow. And until then, I'll post this thing and you should be okay. Good?
Good. Thank you.
Thank you.
Thank
Good
you.
night, sir.
Have a good night. Good
Thank
night,
you.
everyone.
Thank you.
Bye, everyone.
Thank you. Have a good night.
Bye-bye.
Thank you. Bye.